Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 15th of July, 2021, and we're publishing our regular morning update where we look at the latest news headlines, economic reports, and precious metal prices. Today we can see that gold and silver are up, with gold shining because of comments made by FED Chair Jerome Powell yesterday. So let's take a look. Well, good morning. It's Thursday already and it's our barrage walking day. However, looking outside, the clouds are looming. So if it rains, I'm afraid we are fair weather walkers. Perhaps if the rain does come, we might give it a miss. Giving it a miss, though, is not something the news can afford to do. And we can see on Bloomberg this morning, headline, Biden keeps travel ban on Europeans despite pleas to ease it. And this obviously is to do with the contagion of the new COVID-19 variant Delta. Wall Street has surrendered to the $500 billion ETF rush. We'll take a very quick look at that in a second. UK companies hire at record pace as economy reopens. And Tesla correlation to big tech breaks down, blame Bitcoin. We won't go into that. We'll put that one over on the Crypto Plus channel. Bonds are predicting another hawkish Fed mistake. Let's have a quick look at Wall Street has surrendered to the $500 Bitcoin rush. For some reason, Bloomberg has got a fault, or we've got it on our computer, in that it puts a blank advertisement at the top of the page. Anyone knows how to get rid of that? Do let us know. US money managers couldn't stop the march towards exchange-traded funds, so they decided to join it instead. Now it's more like a stampede. ETFs are on the brink of luring more money in 7 months than in any calendar year on record. At $488.5 billion and counting, they'll likely break the $497 billion full-year record set in 2020 in weeks, possibly in days. Within that surge is an historic capitulation by the mutual fund industry. Investors have long been migrating to the cheaper, easier to trade and more tax-efficient vehicle. Now even the most storied money managers are launching ETFs in a bid to stay relevant. And some, like Vanguard Group, are handling their current clients' conversions for them. Almost all of the 25 largest asset managers in the US offer an ETF or plan to do so, according to Bloomberg Intelligence. Capital Group is the biggest without one, and it intends to join the club before long. Now, we won't read any more, but basically, should one be surprised? When you purchase funds, the charges the fund managers are levying against you, quite frankly, are quite extortionate. So people move to ETFs. It's cheaper. Whether it's better is another matter, but it's certainly cheaper. I remember going back 2010, while working in Switzerland as a wealth manager, speaking to heads of European fund manager companies. We asked one of them, how much of your personal investment have you got in funds? And he said, nothing. And we asked him why, and he said, the charges are too high. And for goodness sake, he ran a fund management company. It says it all, doesn't it? Looking at the BBC main news here, visitors travelling into Wales must wear masks. For those outside of the UK, the country is split basically into 4 countries. You've got England, Wales, Scotland and Northern Ireland. And each one has its own individual parliament, for the want of a better term. And they have their own rules. In England at the moment, people don't have to wear masks, although the Mayor of London is insisting on it in the City of London. I think this is from the 16th, or the 17th, not sure. I think it's the 16th they won't have to wear them, but in Wales they will. So people travelling on a bus or a train or other mode of transport from England into Wales will have to put their mask on halfway through. Unemployment in Wales fell as lockdown eased. Seems to be a lot of information about Wales here. Generally, though, not an awful lot of headlines looking at businesses. UK job vacancies climbed past pre-pandemic levels. This is an interesting one. I don't know if it applies to the States. Self-employed refuse mortgages over COVID grants. Mortgage brokers say self-employed and furloughed workers are being turned down by some high street lenders. And if we take a quick look at this, many lenders spoken to by the BBC are not accepting mortgage applications from people on furlough. Brokers said that banks often see people who've received COVID-related grants as high risk because they think they might not continue to receive the income they were receiving before they received furlough. And this is the case. Now, it could be a move by institutions to curb the mortgage market rise in house prices. And this could be one way of doing it, to cut out the sort of froth somewhat. But we've often experienced the fact that people who are self-employed very often get the worst deal when it comes to any form of benefits or grants or whatever. Usually, quite frankly, because, and this will never be admitted publicly, the authorities believe that people who are self-employed are not really declaring their true income anyway because they have so many opportunities to hide it, and also because of various tax reliefs that people have who are self-employed which are not available to those who are employed. They think they get too good a deal anyway. What they don't realise, of course, is that most self-employed people, particularly those who are just starting new businesses or having them only run a year or two, and not making money. They're ploughing their savings and their time and whatever investments they can into those businesses, one day hopefully to create employment and wealth for the country. But it doesn't look like that when it comes to any form of serious or significant benefit. And we know some people who were given self-employed grants over the furlough period. If you've only been self-employed for 2 years or 3 years and your income is relatively low, the actual amount of furlough you received was pitiful. Let's wait and see what happens, but it's a tough old world out there, particularly for self-employed people. America, Britney Spears can hire her own lawyer, judge rules. Come on, that's the major headline. This is an interesting one. Angela Merkel and 4 US presidents. The German Chancellor, who first took office in the Bush era, makes a farewell visit to Washington, D.C. For those who aren't aware, Angela Merkel, who is the Chancellor of Germany, will very shortly be stepping down. And I think going out of politics altogether for a long-deserved retirement. Frankly, not much why the US is launching a $300 monthly child benefit. The payments will go to about 39 million households, according to the US Treasury Department. That's quite a reasonable benefit. Much higher than our people get here in the United Kingdom, I think. And this country has quite a lot of welfare benefits. Let's have a look at the markets then. Dollar index down 0.1 to 92.30. Oils, we can see here, marginally down half a dollar. Equity markets, yesterday Dow was up 44. S&P up 5, but the Nasdaq down 32. We think the Nasdaq is too high, but if earnings come in and they are good, then it'll go to even greater heights. But we're still of the opinion that is going to lead the fall eventually. But we'll wait and see, because we think it's too hyped up. European markets currently, the Euro market's down 20. The FTSE, though, is up 3. The DAX index is down 114 and the CAC down 25. All within 1%, though, so no great shakes. And looking at Asia Pacific overnight, well, two of them down, just over 1%. Hang Seng has bucked the trend, and the CSI by being marginally up, but no great shakes. You'll notice that to a large degree these markets are moving somewhat sideways. Economic reports. Well, yesterday Fed Chair Jerome Powell testifies. Well, he was speaking to the Financial Services panel and actually revealed some interesting information, which we shall reveal now. This is what he said. Inflation has increased notably and will likely remain elevated in coming months before moderating. The Fed has maintained the stance that it will continue its current interest rate policy and monthly asset purchases until there was substantial progress towards its goal of full employment and stable long-run 2% inflation. This has therefore been perceived to be a continuance of its loose monetary policy stance, and we'll see in a second has caused gold particularly and silver prices to rise. So we'll take a quick look at that in a second. The producer price index came in at 1%, which is higher than the previous month and considerably higher than expectations. And this is no surprise, bearing in mind that the consumer price index the day before was also considerably higher than expectations. And we did suggest that that could be the case. So we have got inflation running at much higher prices than envisaged, or higher levels rather than envisaged. And so if the Fed is saying we're still going to continue with our existing, let's call it QE for now, then precious metals are going to benefit. A lot of information out today. We think today will be quite important, depending, of course, on how the figures vary compared to expectations. Jobless claims due to come out, import price index, industrial production. And Jerome Powell continues to testify, but what he said yesterday was more than enough, I think, unless he decides to amend it slightly today. And tomorrow is quite key in terms of retail sales and consumer sentiment. Going over to precious metal prices, gold, 1,832, as we stated a minute or two ago, up 1675 on the day, nearly 1%. And you can see from yesterday the rise after the testimony started to take hold. If we compare that to how prices closed last Friday, they closed, just as a reminder, at 1809. So we are up $23 or so, looking better than it was yesterday morning. Silver, look at that spike. Love that momentary spike. Silver's up 22 cents, 0.8% over the last 24 hours. It's now standing at 26.36 at last. It's having a foothold now above this $26 level. If we compare it to Friday's close, which was 26.13, it's up 23 cents. However, we have to say, going back to gold, at 1832, it has support at the 1750 level and 1675 underneath. It's broken, which is good news, the 200-day moving average of 1828. Its next resistance level is the 50-day moving average at 1836, which is only $4 off. If it breaks that, then there are a number of other resistance points, but it could head towards 1900. But it's going to struggle a little bit unless the data today suggests that further loosening of monetary policy is necessary, and then we will see gold pick up. So we're a little bit bullish at the moment on gold from the current level. Silver at 26.36, well, it's got support at the 10-day moving average at 26.16 and then 25.75 underneath. Its main resistance level, apart from the psychological $27 level, is the 50-day moving average at 27.04. Again, depending on the information today and tomorrow, we might see silver hit $27. It's quite possible. We think it's going to range really between 26 and 27. But let's see. Whatever the data is announced is going to have that impact. Bitcoin down $642, being as low as 31,600 and as high as 33,187. Well, that's it for now. Basically, we produced 2 videos in the last 2 days. Of course, our morning update yesterday and the day before is China's economy hanging by a thread. Please listen to that. We put it in the link below. Quite useful video, and hopefully today, if we get chance, although I must admit the sun is starting to come out now, so the barrage walk is possible, so I may not have time, but if I do, I will produce one on what Fed Chair Jerome Powell said yesterday and its impact on prices moving forward. Thank you so much for listening. If you haven't already done so, please do subscribe to our channel, but also give us a thumbs up. It helps the YouTube algorithm. Anyway, have a great day. Let's meet up again soon. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.